Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Now we're thrilled to have for you, and you know I call it from October to Octobers ago, the Yardeni Encampora market. Ralph Encampora, the technician, and Ed Yardeni of Yale with economics and markets, called this great bull market, and we're thrilled that Mr. Yardeni, Dr. Yardeni, could be in our studios today. Where is your S&P target? And with a report of disinflation and sluggish retail sales, does that make you move it up? Can we make some news here on S&P 6,000?
Well, I've been actually getting a lot of people asking me, am I going to raise my numbers? And I thought my numbers were pretty aggressive about a year ago. At 50,
yeah, but you're on surveillance now, so we got to make some news.
Well, we're at 50. My target is still 5,400. Still use it, but it's a bull market. Right. I can't time it exactly and precisely, but I think we're heading towards 6,000 by next year and 6,500 the year after that. So it's a 25% increase. My
great theme, and I say this to the Eds, Ed Yardeni, Ed Hyman, and others, my mantra from my father is corporations adapt and adjust.
Right.
How are corporations adapting and adjusting to Ed Yardeni's roaring 20s?
Well, I think you're seeing a tremendous amount of spending on technology, not just
totally agree. Number one.
Well, if you look at capital spending in current dollars, 50% of that now is going to technology capital spending, and that's an understatement because it doesn't include things like trucks. I mean, why would a truck be, IT? Well, the truck is the device and the logistics software is what runs it. Everything's technology. So my pet theory here is that when you look at the stock market, you have to think of every stock as a technology company. They're either making it or using it. If they're not using it, they're going to lose it.
Yeah, that's a great point. How can this retail sales number, Ira Jersey was suggesting that's what the market's focusing on. Again, the retail sales control group came in at negative 0.3%. The consensus was for a positive 0.1%. I know last period was actually 1%, so a real fall off there. What's your view of the consumer, Ed, and how do you think that the Fed is looking at the consumer?
I think it's important to remember when these numbers come out that it's merchandise, it's goods. Mm-hmm. And what's been interesting is we had this buying binge coming out of the pandemic lockdowns, and people couldn't buy services, so they bought a tremendous amount of goods. And then they didn't stop buying goods, they just didn't increase their purchases. So purchases of goods is still at an all-time record high. It's just been kind of sluggish, flat for the past couple of years. Meanwhile, services is absolutely booming, as we all know, if you go to the airport, for example, or restaurants.
With the amount of gray hair in this room, folks, Ed Yardeni with us here with futures up 27 off a sluggish retail report. In Netflix right now, there's a spectacular black and white series called Ripley.
I saw it.
You saw it.
Yes.
You got another one.
Early in it is the communication that you and I knew years ago, pre-technology, of the Mont Blanc Meisterstruck 149.
Really?
$900. It's a big,
That's
ugly
a pen,
Mont Blanc that only the rich kids had.
That's right.
When we were in school.
Yeah,
now we've got yesterday Google coming out with this incredible, and Gene Munster was plus on the new search, the new AI. The technology in your controversial call of Roaring 20s, is it about AI? Do you believe in AI moving the Dow above 40,000?
I think so much money is being spent on AI that a good percentage of that is going to pay off. I think there is a certain amount of hype. I think open AI, where it's open to the internet, I think that's going to turn out to be a very big disappointment. It was for me when I signed up for it and hoped that it could write my daily briefings, and I had to spend the whole day correcting its errors. But I think as long as companies put in just their company data, it's going to turn out to be a supercharge. And nobody's even talking about supercomputers anymore because the GPUs, when you pile them all together, they seem to be fast, do the job. They seem to be fast enough. So look, I think the stock market started to discount the roaring 2020 scenario on November 30th, 2022, when OpenAI introduced ChatGPT.
Okay.
And now, all of a sudden, utilities are AI plays. Copper is an AI play. So
I look at M&M theory. And I've never been a big fan of the certitude of it. I think it's really squishy. There's a lot of problems. But the bottom line is, on use of capital, the new rage is, again, share buybacks. They're exploding. Ed Yardeni, on the support that share buybacks give to the bid, is that constructive or is it ephemeral?
Well, it is what it is. I think it's real money, and the money is going to buy these stocks back. So I think it's certainly another factor behind the stock market doing quite well.
Ed Yardeni with Yardeni Research. He just had a new hire. We'll talk about that later. Tom Keene and Paul Sweeney across this nation with futures up 25. Sweeney's going to get us down 40,000 today.
I think so.
Probably he and Alex Steele. We'll see that later on. Paul, the 10-year real yield down to 2.07%.
Yep, we've had that pullback again. The 10-year just trading here 4.36 on the 10-year. Ed, so are you surprised that this S&P 500, that this stock market has done as well as it has this year, up 10% or so, in an environment where the rate cut environment has really become bearish? It went from 6 cuts to 1 or 2 today, whatever it is.
No, I'm very encouraged by that. It shows that the economy can live with these interest rates. The stock market can live with these interest rates. These are normal interest rates. The Fed has really normalized. We're back to where we were before the insanity period from the great financial crisis to the great virus crisis. So normal is good.
Normal is good. So it's been earnings. I mean, earnings have been.
Earnings are doing just fine.
Okay.
Ed Yardeni with us, folks. We're going to continue. Dana Telsey on deck here in about 15 minutes. Generous of Ed Yardeni to be with us this morning. Our economic indicators, and they moved the market this morning. Thank you to Commonwealth for their commitment to Bloomberg surveillance. The indicators brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com. To learn more. For those of you not in the game, why are we with Ed Yardeni? Because he made an incredibly lonely, fundamental economic call 2 Octobers ago to say you should own equities in America, and he does this always with a more long-term basis as well. I want you to speak to the trillions of money that's out there right now, and it's joined 5%, and there's taxes or whatever, have to go into the net. But the bottom line is they read Ed Yardeni or listen to you in trepidation. Give them the confidence to make the first marginal investment.
Well, there's a tremendous amount of money in money market mutual funds, as you said, and people have been very comfortable earning 4.5%, 5% in these instruments. But that is it is a short-term instrument. It's a short-term play. It's not a long-term bet on prosperity, which is what equities are, and even some corporate bonds certainly are a bet on long-term prosperity in the economy. So I think I've got nothing positive to say or negative to say about people who feel that they want to not take very much risk. I think, by the way, it's great that interest rates are back to levels where people who don't want to take risk don't want to be in the market.
That's what Sweeney's doing.
Yeah, flipping coupons. What sectors in the equity market do well in an environment where the 10 years, 4.5%?
I think the answer is becoming all of them. I mean, who would have thought that utilities are plays on artificial intelligence?
I didn't see that coming.
And suddenly copper is another way to play information technology. So I've been recommending information technology, financials, industrials, but the market's clearly broadening out back to, I think we're seeing some excitement in SMID caps, even emerging markets. We've got global stock markets at an all-time record high, excluding the U.S., and the U.S. will be at a record high very shortly.
On Friday, and folks, full disclosure, everybody that comes into us, we protect the copyright of all their work as we do with Ed Yardeni, but I really want to emphasize that our Yardeni Research has very accessible short notes I mean, it's the price of like 2 martinis.
Yeah.
And, it's like, well, okay, at the Carlisle, but we, Yardeni's living large with some great publications, and I urge you to look at them if you desire concision in your reading. The Doom Clue publishes on Friday, like clockwork, to get through the entertainment of the weekend. They're humbled. What do you say to the Doom? What did the Doom crew get wrong? To me, on an ISLM basis, is they're completely focused on the parlor game of the Fed, and they're not focused on the dynamics of the broader IS world, which is the real economy, which was gospel at Yale a few years ago.
Yeah, I mean, I had to unlearn a lot of things I learned at Yale, quite honestly. It's very Keynesian in its orientation. But I've become, like the Fed, very data dependent, and I try to look at the big developments. And I think where a lot of economists missed is the demographics. We've got baby boomers that are retiring, and they don't have a lot of them don't have a mortgage. They don't have college tuition payments anymore. They just have lots of time on their hands, and they've accumulated enough money to go on cruises and go to restaurants and check into the hospitals every now and then just to make sure they can keep going.
Is he looking at us or Tom? I don't know.
I don't know. I got to do one more question here, and this is an audible, folks, on my part. We at Surveillance always look at the great journalists on, even over the Death Star. Keene has been on fire, I should say. There was a guy at the Journal named Wallerstein who did some great work on macro.
Right.
He's died and gone to heaven, and he gets to work for Ed Yardeni. How in God's name did you get Eric Wallerstein to lose the dark trade and come over and make, and get a real job?
I offered him a job, he took it, and it was a done deal, like in an instant.
What's he going to do for you?
Well, he's going to do everything that I do, but his background is he worked on the Fed's open market desk, so he's a real whiz kid when it comes to the fixed income markets. So he'll certainly give us a lot more depth in that area. But other than that, all hands on deck, and he's another hand on deck.
Let him go to the Lisa Mateo Media School, and then we'd love to have him in. Dr. Yardeni, thank you so much. And can I say this? I'm going to put Ben Laidler in this group, Ralph Ancampora. Yep. There's a few others, but Ed Yardeni, like nobody, has called this great bull market of October of, I think it's 2000.
C.J. Lawrence, Prudential Securities. I mean, the list of alumni of those two shops alone.
C.J. Lawrence was green ink, right? It was like a green ink.
Yeah.
You'd sit there.
We got the same thing.
With a pencil in your hand. And Yardeni's got the same C.J. Lawrence, and it was like, Ed Hyman sort of invented it, and Yardeni came along and gave it this whole twist. It was better when it was printed. Am I right?
I don't know. We're high tech now, so I'm not going to agree with that.
Okay. Ed Yardeni, thank you so much.
Thank you.
Thank you for your support of what we do. We go to Dana Telsey of the Telsey Advisory Group. She's been waiting, listening to Ed Yardeni as well. Dana, pretty moldy control group. Is that a trend? Is it a weaker retail sales trend that you and Joe Feldman have to work with?
Yes, it is. It is a weaker retail sales environment. You have a consumer who's much more cautious and discerning than they've ever been in the past. You're seeing greater clarity to margins and profits than you are to sales, given that inventory levels are lean. And the consumer in all income levels have moderated their spend a touch. Certainly what you and I talk about, Tom, with the uber high end, like the Hermeses of the world, they're continuing to spend. But beyond that, we've seen will be definitely more cautious in what they're spending, and retailers are aware of it.
Right. I mean, Red Lobster with some challenges, to say the least, even though Mike McKee's there like 3 days a week, having the lobster and steak special.
Of course.
There's some byproducts in the steak. But are we going to see a workout here in retail, in middle retail, the middle department stores, in the lower ranges? Dana Telsey, are we going to see a rationalization of stores?
I think we've been seeing that. Look at Macy's announcements of their store closures that's out there. We haven't had many companies on the watch list, but you have had announcements of closures, 99 cents only stores going away. Express closing a bunch of their stores. So it's getting more productive. But the interesting thing, for all the closures, there is more demand for space than there is supply. I'm sure if you walk around Manhattan, we're seeing a pickup in occupancy. You're seeing more new stores come. This weekend is the International Council of Shopping Centers convention, where the retail real estate audience gets together. And I think we're going to continue to hear of more demand than supply, because retailers are investing in their footprint, because consumers want that social entertainment of going to a store, and they could buy online and pick up in store also.
I mean, Paul, the retail's convention, that's like the plumber's convention. How about that square footage at the Short Hills Mall?
Exactly. All right, so Dana, what do you expect to hear? What are you going to be listening for from Walmart tomorrow, as they report their results? And, because we always feel like we can get a pretty good sense of how the consumer's doing out there.
That's what I want to listen for. I want to hear how the consumer's doing. I want to hear how they're planning inventory. I want to hear about category performance, discretionary versus essentials. I want to hear about costs. How are they managing labor costs? Remodels. They're remodeling stores. What are they seeing on those remodels? I want to hear about e-commerce. And I want to hear food and grocery versus the other categories. I think there's a lot to learn about the overall consumer environment from Walmart's release tomorrow.
Dana, one final question here. Thank you so much for being with us. But with the market's moving, we got to migrate to market chat. Dana, which part of retail is the greatest opportunity 3 years out? Is it luxury? Is it the beleaguered middle ground? What's the part where you say 36 months from now, this is going to provide total return?
I think luxury will provide total return. I think the Chinese will come back to spending. I also think the strength of off-price and the continued share gains they have, I think there's continued opportunity there.
Dana,
and let's not forget the brands.
I got 8 more questions, but I'm time. We got to get you back here soon as well. Dana Telsey, the Telsey Advisory Group. Maybe we'll touch on luxury with her next time around. We had to get our surveillance meme correspondent to bring him in. He's so in demand by the media. It took us days to get him in. Why don't you bring in our victim?
Maybe he became a star along with his other meme stocks back in the day.
Like he walks down the street. The kids, they got their laptops out trying to make a trade after they talk to him.
Right, the pride of Syracuse. Bailey Lipschultz, markets reporter for Bloomberg News. What's going on? Are we back? I kind of understood the meme stock phenomenon of 2021. People locked down in basements, stimulus money, trading stocks to have fun.
Yeah.
What's driving it today, do you think?
Well, so today we're excluding today, looking at the last 2 days. I wrote a story yesterday about how the fingerprints of momentum quants are kind of all over this. And when I look at the retail flows on platforms like Fidelity's and Interactive Brokers, more sell orders of GameStop than to buy. Investors who bought the stock over the last 3 years and held on to the shares, there's selling pressure there. That didn't exist back in 2021 when short interest was 140%. Now it's closer to 25%. So the dynamics are very different now than they were back in 2021.
What did Hello Kitty do?
Roaring Kitty.
Oh, sorry. My fault. Bailey, you come out at 10 o'clock. They know what you're talking about. I have no clue. What did Hello Kitty do?
The Roaring Kitty X account posted a meme on Sunday night, which essentially, reading between the lines and looking at what the meme stands for, is essentially getting locked into a game. So the picture was a character or a drawing leaning back and pushing forward, leaning forward. That jump-started and sent the markets roaring.
We tear apart short sellers out touting their shorts. They're un-American. They're illegal. Why is this any different going along than the short sellers getting beat up?
Not really. I mean, that's kind of the thing, Tom. When you look at the different arguments around different stocks, everyone has their own case to be made. So the fact that a person on Twitter seemingly is posting memes nonstop and stitched together videos and the stock reacts.
Neil Young's next song, Memeing in a Free World.
Bailey, so again, let's go back to who's buying this stuff. If it isn't, the kid in his basement with his computer, get a sense of who's buying, because I saw some real volume trade over the past few days, tens of millions of shares.
Yeah, when I talk to people who advise hedge funds, they say that the blueprint and kind of the playbook was laid out in 2021, that some of those momentum quants who trade strictly based on trading volumes and momentum are getting in and out of the stock. That's why you're seeing so much money being traded. Because again, when I look at Fidelity data, for example, back in 2021, buy orders were outstripping those to sell like at a 30-to-1 clip.
Wow.
There are more sells than buys right now on those platforms.
So it's different.
So it's very different.
Right. I got two questions. First one's technical. For those fancy hedge fund people, what is the setup that they're using to take $50 a share? Doesn't matter the stock. Are they going long to 51? Are they looking for 52? Are they trading in pennies, decimals?
I think everyone has their own different
Yeah,
strategy.
fair.
And so I think for the most part, the idea is, and it sounds super elementary, buying begets buying. So you buy the stock and then see the next momentum fund buys the stock. So then you already have plugged into your algorithm. You buy it, for your example, at 50, and then you take in that profit at 52. But if you have your computers reading that the stock's going to keep going, then you wait for a sell signal then to get out. So they're buying early and selling early.
Bill Gross, we published today that my good friend Bill Gross is out. And I'm going to explain this slowly, folks. He's doing options where he's writing them out, taking in a premium, looking at the idiot volatility and hoping that the stock will go down. Did I do that okay? Was that like...
For the most part, he's hoping that the stock trades flat.
Okay.
So
fair.
he's doing that for both GameStop and AMC. He did it for Trump Media. It's really when I was talking to him through one of his PR people, basically saying the expectation is that there's enough money that you can take both sides of the trade as long as it doesn't plunge or absolutely rip again. He's just taking cash.
He's just taking in the premium while the children play.
Exactly.
Okay.
So, all right, that's enough for the meme stocks. Your other
Thank
beat,
you.
your other
Thank
beat
you,
is,
Paul.
is IPOs. We heard from some CEOs this week from around the world speaking that they're pretty optimistic that the IPO market this year is better, and they expect it to remain pretty solid. Tell us about the IPO market this year. What have we seen so far? How's the volume? How's business? And then what's the outlook?
Everything has to be better when
Yes.
you're coming off the worst year in more than 12 years. So we've seen volumes, for the most part, taking up. The comps actually got a little bit more difficult because this time last year, J&J's Kenvue carve-out happened that priced a few $1 billion in paper. But we've seen 3 deals greater than $1 billion. Viking Holdings, luxury cruise line, has done quite well, up 17% from offer price. Amer Sports, which was hotly debated, up about 16% from that price. And then Kaspi, which is a Kazakhstan app.
Oh boy.
A lot of debate around that, but we've seen Reddit and Rubrik and UL Solutions, who does safety testing, a number of kind of companies coming to market and for the most part being well received. And we've seen a number of companies considering whether they want to go now or wait until after
Are
Labor
we
Day.
back to where profits or EBITDA were blind to that? They're just looking at growth?
No, so far removed from that. And that's the big issue when you talk to venture capitalists, is that they have a lot of companies that they need to get out of and start to return money to their LPs, and the market's not ready for that.
Who decides the next meme stock? Who chooses? I mean, I looked at like 15 names, and there's no correlation, Paul, that I can see. I mean, is Peloton in there?
Well, this is where the existential debate of a meme stock comes back. Like AMC and GameStop, Bed Bath & Beyond back in the day, I think were true meme stocks, heavily shorted companies that were rallying just because people posted actual memes on the internet. Bed Bath & Beyond, Robinhood, some of those are heavily shorted names that are just getting your typical short squeeze and maybe a gamma squeeze if people are flipping out of the money call options, but it's not what I would classify as
See the
a
difference
company.
here? If I say gamma squeeze, they put me in the surveillance penalty box.
Yep.
Bailey trots it out like it's the King's English.
The markets guy. All right, so what's next here on your beat? Because I'm thinking spin-offs, IPOs, SPACs. I mean, what's the next big thing?
I think more and more conversations are centering around spin-outs and carve-outs. A number of public companies considering IPOing particular units. We saw, and we have seen recently, and continuing over the last few years, investors wanting skinnier companies and more focused stories. So we saw that with J&J Kenvue. We saw that with a number of companies, Kellogg creating Kellanova and WK Kellogg. So breakups are back in vogue, and that's one of the things we've been watching when we talk to ECM bankers.
Oh, so then I get it. He's migrating from our meme reporter over to our matrimonial reporter.
That's right.
Did you see Rory?
Yes.
I know.
Too bad.
Bailey Lipschultz will have that for you, the breakups reporter for Bloomberg. I learned a lot, seriously.
Yep.
It's great. I don't get it.
Yep.
I just totally don't get it. Bailey, thank you in the King's English. Your daily look at the front page is brought to you by the Lisa Mateo Show, the star of the Lisa Mateo Show with our newspapers today. What do you got?
Well, all right, this one stood out to me. It's from the Wall Street Journal. Cheating on workplace drug tests hitting the highest rate in more than 30 years. Okay, this was a study, Quest Diagnostics. They took urine samples from 2023. About 31,000 drug screens out of 5.5 million showed signs of cheating. So the percentage of samples that came back positive about the same, but people are tampering with it more. You know, marijuana laws have changed, things like that. How they're cheating, they're using someone else's urine. They're using animal synthetic urine that you can actually buy online. Really? And they're using that. So invalid tests up 45% 2023 compared to the year before that.
So they don't test for weed anymore, right? Because that's legalized, right?
But it depends, different states. That's what it is. So different states have different rules.
Oh, I see what's going on.
Yeah,
Okay.
so that's why there's this gray area now. So more people are cheating on the tests. That's what they're finding. So I thought that was interesting because it shows the workplace is kind of changing too in that way.
Yep, absolutely. So, all right, interesting stuff.
So you were talking about the entertainment, right? So I want to keep playing on this in streaming services. Tom, you're going to like this. The latest Nielsen data shows YouTube giving streaming some competition for viewership, okay? So it shows 10% of the time Americans spent in front of TV screens last month was on its YouTube Smart TV app. The top position went to Disney, actually. Disney Plus, Hulu, ESPN, all the same. They took 11.5%. So you had YouTube at 10, you had Disney at 11.5.
Right.
I mean, you see the difference.
I read it very carefully, and it's really coming on. And what's amazing, and we're living this every day, folks, out on YouTube, subscribe to Bloomberg Podcasts, is the combination of YouTube, that's where we are, folks, and YouTube TV, which is totally, and Paul, that's sports. Like they've got, come on. They got the money to get that NBA deal or part of it,
they have
whatever.
Films, produce series, sports, live events.
What was most important to me on this story was that for the first time ever, Nielsen is tracking broadcast viewership, cable viewership, and streaming viewership. It took them 15 years, but now we're there. And so now they can do it by the show. Right. So what the streaming services are saying to the actors and the writers, I'm going to pay you based upon the viewership to your show because I can now measure it.
And just as, everybody knows this, but the search engine, the knowledge base of YouTube is scary. I was searching David Sanborn for our songs for the day, and instantly I had up all this stuff that Google found of David Sanborn, the great sax player. What do you got next?
So the streaming services are actually up in the ante. They're trying to offer content from top celebrities, musicians, comedy. So Walt Disney came out and they said their streaming platforms added Bruce Springsteen to a list of artists that are producing shows. So his documentary is going to be out October on Disney Plus and Hulu. But Disney, they've already had, Taylor Swift, Beyonce. They've done Billie Eilish,
Bon Jovi's
Elton
out there
John.
somewhere.
Bon Jovi's
on Apple, I think.
Not on Disney, but yep. And then and it's not just music artists, comedians are big too, drawing in crowds. So Hulu has acquired the rights for stand-up comedian Jim Gaffigan, who's really popular and hilarious, by the way. So his show, The Skinny, that's going to debut November 22nd. But it just shows how much they're scrambling to
Paul,
find
where's
and attract
regular
viewership.
TV 5 years from now? What would Moffat and
Well, I would
Nathan
argue
say?
it just doesn't exist. It does not exist.
Eric, we got to get Moffat on. We got to get Rich Greenfield on. We got to get some Brian Weezer. We got to get some of these animals.
I still pay cable. I
I
don't
know.
know why.
You got one more?
Yeah, one more. Tom Brady's Roast. Do you remember that, right?
Yeah,
it was on Netflix,
I missed this.
Yeah, the most watched TV program on Netflix in the last week was his roast. Now he's saying he kind of regrets it a little bit because of the way it impacted his kids. He was thinking about that, some of the jokes and some of the things like that. Nothing about his kids, but, they were poking fun, his divorce and things like that. So he was actually one of the producers, the executive producer of it. So now he's kind of backtracking.
One of the
and
questions
saying,
is, how much was he paid for that?
Yeah.
Now, I've heard people say $50 million.
Really?
Yeah, I have not
5-0?
5-0.
Ooh.
I don't know, but what would make Tom Brady go through that?
Dude, go through that.
And I'm not even sure for Tom Brady $50 million's worth it. But I mean, he did it, the knucklehead. So deal with it.
I remember. I mean, you guys are too young to remember this, but I remember the rage of the roasts years ago, like Don Rickles and Dean Martin.
Yeah.
And I used to sit there and look at them and go, "Why are they doing this?" I never got it. I'm sure we have people listening and watching who love these things, and Damien loved it.
Yeah,
Damien was all over the
Sansar
Tom
loved
Brady
it.
roast, but I never got him when I was a kid, and I can sympathize with Mr.
It's
Brady's
tough.
kids.
It's like a whole bullying session.
You got one more, or what? Are we done?
No, we are done for today.
Okay, Lisa Mateo, thank you so much. On the newspapers there, don't forget, folks, the Lisa Mateo show. And the upfronts they're on fire.
Yeah.
I mean, the Lisa Mateo upfronts are.
Oh, yeah.
Just-
for the
My
network.
family always says we should be a
Reality
reality
show,
show
yeah.
around the dinner table.
The merch bag,
Yep.
the swag bag
Yes.
for the Lisa Mateo show.
Yep.
A can of yogurt, that's what you get. Yogurt and a spoon. Thank you, Lisa Mateo. Thank you so much, the newspapers today. Red and green on the screen. Paul, this is exciting. 35 minutes.
Yeah.
It's like
It's
a jobs
important.
report.
This is important. I mean, I think, if you're the Fed watcher, it's where is inflation? January, February, March, a little bit hotter than expected. And what are we going to see in April here? Because a lot of folks would like to see a little bit of a cooling in that inflation print and maybe give the Fed a little bit more leeway to cut rates.
Do you know that our newspaper report is so popular, they're making a podcast out of the Lisa Mateo show?
Don't put more
didn't
work
know
on me.
that.
Wow. Get that sponsored, no problem
You
whatsoever.
should see it, folks. I mean, seriously, how she puts this together. She's got like 20 newspapers. She puts it together.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.